Now it seems that the perfect storm is looming on the horizon for Chinese Bitcoin miners. With the upcoming halving only 2 months away, these miners need to secure the latest and most powerful ASIC mining rigs. But the crisis surrounding the pandemic has compounded supply chain issues and led to major setbacks inside China's crypto mining industry. With Chinese officials reporting that they have ostensibly contained the spread of the illness, it seems the country is now slowly recovering from the outbreak, and businesses nationwide are beginning to resume normal operations. Yet domestic Bitcoin mining, initially considered to be virus-proof, has been hit in China. And industry experts are now suggesting there is still a lot more pain to come. Now, thanks due in part to quarantine measures enacted by Chinese authorities, manufacturers of ASIC mining equipment, such as the Beijing-based Bitmain and the Shenzhen-based MicroBT, have been unable to complete delivery to mining farms. Now, China's mining industry, which is mostly situated in the hydroelectric abundant northwest regions of the country, is literally on the opposite end of the country from where the manufacturing takes place on their east coast. Now, reports from outlets like CoinDesk show that this supply chain disruption could have been behind Bitcoin's stagnant hash rate last month. Also problematic was a delay in the shipping of the new 7-nanometer chips from Taiwan-based manufacturer TSMC. These new 7-nanometer chips were slated to go out in late 2019, but delays mean manufacturers are not receiving the new hardware until now in early 2020. These new chips are denser, more powerful, and require less power, and are high in demand among mining equipment manufacturers for their latest generation of ASIC hardware. But even as things return to normal somewhat in China, the mining industry is said to face a so-called Guangnong, which means mining catastrophe. It's slang for pick up the soy sauce, Guangnong, and it refers to less than desirable situations you would rather avoid dealing with. So, this soy sauce mining disaster is currently trending in the Chinese cryptocurrency industry, as many feel that this unfolding crisis will lead to a massive shutdown of many smaller mining farms inside of China. With the price of Bitcoin staying flat or even dropping further amid the panic, mining becomes less profitable and is putting an unbearable pressure on independent miners and smaller operations. This, in combination with the looming halving expected in early May of 2020, means miners overdue for their scheduled upgrades to those 7-nanometer powered ASICs for their energy-intensive proof-of-work mining are seriously hurting every single day they continue to mine without this latest equipment. Now, this is being described as the perfect storm of contributing factors, putting the squeeze on nearly everyone except for the very biggest mining operations in China. Now, the outbreak and its fallout caught the majority of the mining industry by surprise, and those operations that did not upgrade early enough or are last in line for new gear are now facing dire consequences. Industry observers say as the new hardware arrives and mining farms see a collective upgrade, smaller operators which are still recouping capital expenditures from the purchase of their old mining rigs will be at a severe disadvantage to those better equipped competitors. What's worse, the new chips now arriving will also drive up the hash rate, making it even more difficult for smaller operations with outdated equipment to compete for block rewards. Other industry observers, however, are more hopeful, stating that a mining catastrophe can be avoided, of course. Dan Li, co-founder of XSJ Mining, a mining farm located in the northwest part of China, spoke to the author of a Decrypt article stating that even if the price drops, miners won't lose everything. He believes that sophisticated miners have recouped their infrastructure costs during the past 3 years, which is the effective lifetime of the current standard of 16-nanometer chips. So they should be able to afford sunsetting outdating equipment. Now, Lee believes that mining is just like any other energy storage business. Though miners are affected by short-term price fluctuation, the experienced ones understand that to be truly profitable, you need to be in it for the long haul. Saying, quote, if you look at most energy projects, they are looking out at a 20 to 30 year horizon. The reason is that, compared to trading tokens, mining gives steady cash flow, as long as the risks are properly mitigated. Now, among the tools available to more sophisticated and well-resourced miners is new hedging financial instruments, such as derivatives being offered by Bitmain and Canaan, designed to protect operators from complete disaster. Of course, we covered previously the reports that many Bitcoin miners, particularly in China, were making heavy use of BitMEX derivatives to utilize the Bitcoin that they mine to actually short sell and actually make more profit in a falling market. Digital merchant bank DAG Global is another institution offering innovative ways for miners to hedge hash rate fluctuation, although this derivatives market for sheltering miners is still very immature, and no one knows whether there is really enough liquidity yet there for it to be a viable alternative. So, what is to be made of all of this information? Now, Mr. Shuyao Kong, who's the analyst behind the article, the original article from Decrypt, says that he is still pretty pessimistic about China's smaller mining operators being able to survive the squeeze around this particular halving event. He suggested that it's analogous to how the whales, who control, in his opinion, the crypto trading markets, playing the smaller retail investors like suckers. Similarly, the smaller players in China's mining industry are forced to respond to circumstances rather than control them. Their fate is often determined by the electricity price they manage to negotiate. Meanwhile, big mining farms and machine manufacturers move the market. Bitmain, for instance, not only sells rigs, but also mines coins using its latest machines before pushing them to the market. By the time retail miners enter the field, they might just be fresh leaks waiting to be cut by the big miners. But I want to point out another alternative, another narrative here that wasn't really covered in this Decrypt article, which is the fact that there is global competition for hash rate and mining power. Of course, this comes to a kind of a chicken and the egg situation where there is a lot of interest for mining operations here in America and in Canada. But as long as those regulations from the federal government or even from state governments, with the exception of Wyoming, remain kind of vague and in limbo, those mining operators aren't really incentivized to expend lots of capital. But here's the thing. Bitcoin mining is a profitable industry. There is a profit incentive. And just as in all free markets, when there is incentive or when there is an opportunity, which if a lot of Chinese smaller mining operations kind of do get really hit by this and maybe even have to go out of business, there's going to be a big demand for, there's going to be a big opportunity for miners to step in and fill that void. And you have, very wealthy nations or investors, places like Canada, places like Israel, places like the UK, places in the Eurozone, places like Canada, all over the world, you have individual investors, you have nations, you have economies that are cash rich and are willing to be entrepreneurs, because that is how, the free market works. Entrepreneurs step in to fill a need, to fill a demand, and they strive for a profit incentive. So there's a profit incentive here in Bitcoin mining. So overall, long term, I don't see this being a big issue for Bitcoin. I see this being an individual issue for Chinese entrepreneurs that are kind of being hit heavily hard by this. So this is a short-term issue. I do agree with the writer of this article that we can see more pain for smaller operators, for smaller miners in China. I think that the larger operators will be just fine, although it's unclear exactly what the extent of the pain will be for smaller operators. But I think that this, again, creates an entrepreneurial opportunity for individuals in other nations that are sitting on cash and are ready to invest in potentially depressed prices to buy up miners on the cheap, or to even compete with Bitmain for 7 nanometer chip manufacturing. I think that there's a lot of opportunity, a lot of incentive. And overall, for the Bitcoin network, I see this as being positive and just a shakeup of the current status quo. And potentially, this will kind of help get rid of this idea that, mining is centralized in China. Well, there's a reason for that, because electricity is very cheap there. And again, you have other energy cheap countries that have the opportunity to step in and fill this entrepreneurial or economic void. So this is really positive, I think, moving forward. I think this presents a lot of entrepreneurial opportunity for savvy investors who are sitting on the sidelines and want to enter the Bitcoin ecosystem in the form of mining. And I think that this will largely be a positive thing. But as always, let me know what you guys think in the comments section down below.